Welcome to this month's Insights interview from the Payments Association. And I'm Tony Craddock, I'm Director General. And I met today's VIP guest at a lunch in Borough Market in 2015. And he was, and certainly still is, a man on a mission to build a super app that connects all your money in one place, a super fintech, if you like. In the last 7 years, he's built a multi-award-winning business whose products I use every single day of the year. He's created a progressive team culture with a diverse range of people, over 220 people with over 50 nationalities represented. He's got 4 million users, and as if that's not enough, he's just decided to launch in the US as well. So please welcome the CEO of Curve, Shachar Bialick.
Hi, Tony, and the Payment Association crew. Nice to be here. Thank you very much for the opportunity.
It's great to have you here. So let's cut straight to the chase here. At the beginning of every Insights interview, I invite my guest to explain how they kind of remain motivated and what makes them go the extra mile when faced with the balancing, challenging jobs and home lives in today's rapidly changing world. So, you've done what an awful lot of entrepreneurs strive to achieve. You've had a vision, and really, when I first met you, that's all it was, a vision, and you converted it into reality. And people look from the outside, they go, well, that's not so hard, but I'm sure it is. So what is it that really makes you go the extra mile, Shachar? And what are the principles that helped you achieve this?
Yeah, it's a great question, and I think it's a relevant question for any company, for any employee in any company, and any sportsman, any professional sports team. And I believe it has to do with 3 elements. The first one is to be mission-led. You are doing what you're doing because you're intrinsically motivated to be successful at your goal, whether it's the mission, the vision, or the founder, or whether it's the career progression as an employee, whatever that may be. The second element is around standards and principles. And those standards and principles are such that allows you to operate at the most highest bar possible. What I mean by that is that everyone wants to be great. Everyone wants to be number one. And the fact is that because everyone wants to be great and everyone wants to be number one, it's really hard to be great and be number one. And that means that those who become number one, they haven't born with them. They aren't the most talented people or skillful people, but those people have a principle or standard that they have to be the very best they are. And for that, you have to work really, really hard. And I think there's 2 stories that really resonate with me that come from professional sports teams that are very similar, in my view, to building a company, to building your career, and they both involve Kobe Bryant. So one story is that LeBron James had a game with Kobe Bryant, and LeBron tells the story that they had to start the game. It's the practice for the game at 7 a.m. in the morning. So all the team players coming in from both teams to start the exercise and practice at 7 a.m. And he knew that Kobe Bryant known to be working hard and high standards. And he want to make a point that he's going to work harder than Kobe. So LeBron started the practice at 5 a.m. in the morning, came all by himself to the basketball gym and started to practice. And lo and behold, who do you find there at 5 a.m. in the morning, all sweaty and pushing weights? Kobe Bryant. And he asked Kobe, but Kobe, the game started at 7 a.m. What are you doing here at 5 a.m.? And Kobe tells him, well, I heard that you think you're going to work harder than me, so you're going to be here at 5 a.m. I came here at 3 a.m. to make sure you know that I'm going to work harder than you. That's a good example of what does it mean working hard. It's not easy to work hard. There's a lot of sacrifices to be given from family and friends to be able to be the very best you can. And that's really hard, but that's what makes people great. Now, the other element of working hard is not just churning work, it's also churning work with high standards. And the standards are very much about the basics. You have to get the basics right. If you're not good at the basics, there's nothing to be built upon them, because then the pillars are very not strong. And a good story there again, Kobe Bryant, is that he had, after the end of every practice, which is usually 5-6 hours a day of very hard practice, he would not leave the basketball court before he had 5 swooshes. A swoosh is like the perfect shot. It's when you take a ball and put it all through the net from the 3, not from the penalty, from the 3. And it's really hard to make 5 straight swooshes. Especially, it means that if you have 4 straight swooshes, but the fifth one cancels, you have to start all over again.
Yes.
So imagine yourself, Kobe Bryant, after 5 hours of very hard work, not leaving the court, regardless whether he has a date dinner with his wife or a business meeting outside, he would not leave the court until he have 5 straight swooshes, the basics right. That's what it means to work really hard and have high standards. And the same is applying to any business career. Everyone wants to be number one. Everyone wants to have a global business. But to do that, you have to have very high standards and you have to get the basic right. And you have to work really, really hard. Not just you, the founder and CEO, but everyone around you. The entire company culture has to be that much. Which brings to the third reason of how I'm keeping myself motivated. The first one was mission-led, intrinsic motivation. The second one is have very high standards and work hard to achieve those standards. And the third one is the team. Bring around you remarkable people that are assigned to the mission, that are assigned to the standards and the need to work hard to become the very best. And that's how you can build a remarkable organization, because that kind of culture is propagated and embedded and cross-pollinated across any employee and team member of the company.
I love those 3 principles. And I can actually, knowing you quite well, I can see how you use those as, if you like, the bedrock for your and your performance, your team's performance. I mean, you're quite young though. I mean, I say that knowing, I'm in my 7th decade, for goodness sake, but you're still a bit of a whippersnapper in business terms. But that certainly hasn't stopped you. And you read law, and you studied law and economics at Tel Aviv, and then you did an MBA at INSEAD. So when you were really a nipper, and your parents said, here's a young man, was there anything that would have prepared you in your early years that prepared you to be an entrepreneur now?
I think yes, definitely the nurture of the environment creates certain elements in successful entrepreneurs. That's my experience, what I've seen. But talking about myself, and I also thought a lot about why am I so different? I'm thinking differently. I have different strengths than most people, and I have different stamina of work ethics. So ask myself what happened. So the first element is that I'm coming from a family of entrepreneurial. None of them built a startup, but their own businesses, small to big. And on a Friday dinner, when all the family comes together, it's usually talking about work and those kind of work fight and arguments about that, because it's a family business. So that kind of gives you the ability of understanding that building businesses is a method, an approach. And because you lived into that type of approach all your life, you feel more comfortable about starting a new business. The second one is that I came from quite a poor family, which meant that I've seen what happens with money constraints in the family. I have 5 more siblings. We're 6 children in the family. So you can imagine how difficult it was, my upbringing. So you see how hard it is when there is no money. So that intrinsically motivates you to make sure you have enough financial freedom. But the second thing is that I had to go work from very early age. I had the benefit of having gone through some family businesses across close or far further away family members, but they all had their own businesses. So I could jump and join them to work in my holidays after school and so forth, and then give you the work ethic of how hard it is to make money and what it means to really work hard with your hands, not just with your brain. And that brings that bringing of work ethic, of hard. And the third thing is about grit, perseverance. It's about the moment you believe in something, there's the power of belief. Whether you believe you can or you can't, you are right. You probably heard it before. And how the power of belief through grit allows you to achieve remarkable outcomes. So from early age, and this is where the military came into play here. You're starting. I'll give you I'll simplify the example, but just to make the point. You start in the military, you're going to the best, one of the best units in the Israeli Defense Force. It's part of the training. You have to go and do a track of about 60 kilometers, 40 centimeters in the water, 40 kilos in your back. And it's pretty rainy outside and cold. And you look at the commander that says this is the journey in the next couple of days, and you're like, it's crazy. There's no way we can do that. And then you do that. And then with all the hardships and all the hard times and carrying your friends on your back and pushing them, and you tired, just want to get it done. At the end, after almost 36 hours, you're done with the track. You've achieved
Wow.
what you thought was impossible, and you do it again and again and again. And those build you up this ability that if you believe you can do something, it's all in your brain, and you put enough work and grit into that, you will be successful. And I think that also why in Israel you have so many entrepreneurial spirit and entrepreneurs, because they have the grit and this power of belief.
I've not really connected the two, but it does make a great deal of sense. Do you think we should have national service more broadly?
I have no doubt. I see a change between the people of your age, the 60-year-old, who most likely had more experience with compulsory armed military service, and the generation today, the work ethic, the culture we come from, and the racism that I see also today in the world that did not exist in the UK. The UK is the North Star of culture, of industrial revolution, of technology, of governance. It's remarkable, but this is, I think, was much stronger in the past. And I think one of the key elements for that is that you had this melting pot in the military in your time. Yeah. And that allowed you to know different cultures and accommodate them and work with them better. You had a similar language to each other. You knew the principles of working hard and grit and perseverance and what really matters in life, which is life. With all the respect to everything we do, nothing matters. No one will die. Right? Yeah. So I would definitely be a proponent, a supporter of bringing compulsory service to the UK. I think will make the UK a stronger country.
Yeah, no, I think that's true. To what extent do you bring a bit of the military discipline into the culture of your own business?
A lot. Most of the company strategies, company formation, governance, structure is military. People don't know that because they've not been to military, but it's the company structure. CEO is military definition. Is an EXO chief. Yeah. So there's a lot about the military that helped me bring it to the company, from strategy to structure to different tactics like pincer movement that we've done in the past, and standards of hard work and coaching and training. Working at Curve is really difficult. It's not for everyone. It's for those people who are really, really ambitious about their careers. They want to train themselves and grow themselves, and they're willing to give what it takes. Because if they have those elements, when they come to Curve, they have empowerment, enablement. They can do whatever they want as long as they agree on the mission and direction. They can dissent openly and then commit wholly, and they would learn from the very best. Will learn not just on the competency of their skill set in their own role, but also what does it mean to be great? What does it mean to work with the very best? And what does it mean to be Kobe Bryant? He did not was not born from his mother's womb being the best player in the world. Neither Michael Jordan, neither LeBron. They became the very best because they said, "I want to be the number one," and they were willing to give what it takes to be there, which is a lot of sacrifice. And that's what people don't understand. A lot of sacrifice.
Brilliant. Did your parents predict that you'd make the grade, do you think, as an entrepreneur?
I think every parent would predict their kids to be great. I don't think any one of them kind of sat down and said they're probably wouldn't say they're surprised of where I got to, but at the same time, when I say we predicted that by any means, no. And if you look at my siblings, they're very different. I was very lucky to a degree. That I was sent to study computer science when I was 16, and then I opened myself to a much older audience that have more wisdom and learn from them. I was very lucky to be accepted to the unit I got accepted in the military, because then you get the very best of their breath around you and above you, and you've been trained to what does it mean to really be the best, and what does it mean to have high standards and high ethical standards. And then I got lucky because, well, not so lucky at the time. I got injured in the military with many of my squad, my friends from the unit, and then we built our first startup. So I was lucky in that sense that we had a very bonded team that felt that together we can do great stuff, and we've done great stuff 4 times over, 4 exits together as the same team. So yeah.
Great to hear. It's great to hear. So thank you for sharing your insights about you. I'd like to move on to your insights about the payments industry. This is a question for you, particularly for you, because you're known for seeing things differently. And that actually is a huge compliment, because I think so much of the industry is sort of built on things that happened over the years. And, it's a pretty good industry. It's pretty secure, pretty low cost. It serves the interests of billions of people who want to move money, get paid, pay and get paid. But some would say that if they started with a blank sheet of paper today, nobody would have designed the payments industry like this. So what do you give us your views about the payments industry and how it works, and comment on what you think its problems are, and then let's talk about the future.
So I actually think the payment industry is remarkable. And I'm a payment guy. And when I built Curve to begin with in 2015, when I started the company, it was a payments company. Fintech has just been evolved afterwards as a category. And we're, of course, part of that category. But I think the ecosystem as a whole, despite its challenges, is one of the most remarkable ecosystems in the world. And they are the ether of making business globally. Without those companies that create a payment ecosystem, which majority is Visa, MasterCard, but also the payment networks like ACH, Faster Payments, and SEPA and Open Banking are the engine of the economy of the world. And because of that reason, by the way, I believe we must regulate MasterCard and Visa globally, as they, and not only them, as they do in Europe and the UK, because they are the gatekeepers of the ecosystem. They decide what products would rise or not. And I think we're all aware of the challenges we had with Visa in the early days. What do you mean you're going to front MasterCard in front of Visa cards? And what do you mean? What do you mean? We're following the regulation. What do you do? And of course, a lot of discussion there. And you were indeed right when you said if we had to start with a blank piece of paper, it would be very different. So it could be different, but not so different. Number one, if you're focusing on the major networks for payments, Visa and MasterCard, technology is just one element of their work, of their mission, in my view. They have two other elements, which is trust and standardization. What Visa and MasterCard provide remarkably well in the market is trust. As a merchant, the payment will pass. As an employee, as a payer, you will only deduct the relevant amount. And if there's an issue, there's a chargeback process to protect them with their bank. And the second one is, so that's trust. And the second one is standardization, allowing different banks to communicate amongst themselves with a very high trust environment and someone to make sure everything operates according to the rules. So that's remarkable. I think what would be different, and that's how we formed Curve, is that if you had to build MasterCard and Visa today, it will not be a physical card. I think we all agree with that. So what would it be? Would be the question that we asked ourselves in 2015. And the answer to me is very simple. It would be a digital interface. So what does it mean? It means that every bank will provide you a digital interface, their own app connected to the MasterCard Visa network. That's a possibility. Unlikely, because then the network will not be a centralized network that connects the world. Therefore, it is our belief that if MasterCard or Visa would have built today, MasterCard and Visa, instead of providing the bank with the technology, which is the plastic card to give to their customers, they would provide the bank with an app that the bank can connect to and build their own softwares and systems and proposition on top of the app. And the customer will only have one app, one MasterCard app, one Visa app. And what's remarkable about Curve is that it's basically saying that number one, MasterCard and Visa will not be fast enough to become that what we call over the top or layer 3 ecosystem. And also, even if they would be fast enough, the customer would have still fragmentation. I would have all my Visa cards in one place, all my MasterCard cards in one place, and all my Amex cards in a third place. Not so good. Where Curve is building an operating system that brings the entire banking ecosystem and the networks in layer 2, Open Banking, Visa, MasterCard, into a single interface that is focused on the customer, which is really important. Unlike Apple Pay, which the entire ecosystem focused on Apple Pay, and the customer happens to be part of the ecosystem, we take an entire ecosystem of money and focusing it at the customer. We don't care if it's Apple or Android. We don't care if it's physical or digital. We don't care if it's Visa, MasterCard, or Diners. Bring it all together into one single interface in which the customer can manage their money. And the way we define our mission is an operating system for money, not just a super app.
And as a customer of Curves, I would absolutely absolutely reinforce that you take a customer centric approach, and also as a customer of Apple's, I can really feel that I'm a secondary component of this. So looking for the future, No, looking at so you've talked about how you're solving an intrinsic problem of the multitude of different card and schemes, and you're bringing it into one ecosystem. So what about the future? What are the things that you can predict over the next few years that we're going to see changing?
So I think it is inevitable that eventually a customer would have one app to manage all their money. And there may be more than one company product providing that globally because of regulation and different payment systems in every region. There will be at least 1-2 winners in every region. So you would imagine 1-2 winners in Europe, 1-2 winners in APAC, 1-2 winners in the US, and so forth. And from that interface, it will be the gateway to everything money from the customer perspective. Now, once that gateway exists, then the game begins. The way to think about it is that once the internet came in, it made data and information much more interoperability between the data elements of different companies, and then the customer would be able to achieve, reach, access better products and services with lower cost, better experience, more convenient, whatever the customer looked for. The same would happen with the OS for money, with the OS for money. The customer would be able to access that interface. That interface would have a lot of data on the customer, with the customer permission, of course. That data will be shared with the customer permission with multiple other providers, and providers will be able to offer customers, whether proactively by the customer or reactively by the customer, to refinance their loans and reduce their borrowing costs, to get a new car to give them more rewards, to be able to remortgage their house or reinsure their car insurance or their house insurance, because the data is there. And by providing data to financial institutions, they're able to better fit the risk profile and not rely on archaic legacy systems like credit score. My credit score, believe it or not, is 0. I've lived in the UK for more than 10 years and it's 0. I cannot get even if I try to get a new SIM card, a new cell phone, they can't give it to me. All I have to do is just look at my account and I'm all fine. But I can't get it because my credit score is 0 because I never took a loan. I never took a loan in the UK. And there's 50%, 20% of the audience population in the market is like me. They have the money, but we don't take a loan.
Yeah.
And we're expats. So those archaic systems create this waste that is being encumbered, is being pushed to the customer. The customer pays for that waste because the FI don't want to take the risk. So we can create a much more efficient information transfer between customers and providers. And that's what will change the world. It will make some banks commoditized, some other banks more successful. New FIs will come into the play and do better. And some FIs will save more money or make more money because they're much faster with adoption of technology.
You're referring to a world where essentially we're going almost the phrase back to the future, because we're looking at a time when I was growing up, the local storekeeper would know me very well, would know what I liked, would know my credit worthiness, and would also tailor the provision of products and services to exactly the information they have about me. And that's really the future. True.
One difference, however, in the past, that account manager at your bank mostly sold the bank's services and products because that was their job. And sometimes, as we know by the law already, those services were not the right services for the customer, but those were the only services they had, and that's how they got the bonus. The OS for money will do exactly what you said, but with any service available, whether it's your bank or not, focused on the customer. And that's where we think the end game would lie in the next 5-10 years, not so far away from here.
Very exciting, very exciting. So let's move on now. We're going to move on to talking about your exciting moves to the US. It's a tough old market in the US. Why? And what are you trying to do there? And what can we learn from what's happening there?
I think, number one, it's very obvious to everyone that all the cards in one would fit much better to the US population, where, if, for example, in Europe and the UK, you have 3-point-something cards on average. In the US, it's around 7-8 cards on average. And also, when you look at the credit debt in the US, it's skyrocketing. It's over $1 trillion. Even after the student loan forgiveness happening right now in the US government, still it's a significant debt that consumers have in the US. I just read an article yesterday of an 83-year-old lady who's still paying her student debt from 86. And she has a student debt to the tune of $300,000. and today it's 3. It's like, this is unheard of. My
Man.
grandmother still has student debt. That's basically what it means. And our product can really solve or help solving that problem, because not only you're able to see your money from all your spending in one place, you're able to optimize your rewards and reduce your borrowing costs. We're able to connect you with better offers for refinancing your debt.
Nice.
And that's the reason we started in the US. In fact, the US was always our strategy. It's just that we knew if we started in the US 6 years ago, 7 years ago, it would be very difficult. So we started in Europe, enjoying the protection of regulation in Europe, creating the product, proving the product market fit, proving we can build a great business, building relationship with the networks, and now exporting it to the networks. And it's still not without its challenges, because it's still a novel product and innovative in the market. And one of the things we've done differently is that we've seen and investigated why many other UK companies that tried to cross the pond failed. Revolut, Monzo, Number 26 failed miserably. And we concluded several items. Number one, the product doesn't fit the market. There's no problem of FX in the US for 2 reasons. Most Americans don't hold a passport. The second reason is that actually the banks there are doing a great job with FX. They're providing you zero FX, Chase and Capital One, and so forth. The second one is that there's no problem with their bank. Their bank is doing also a great job. Chase, Wells Fargo, Citi, great banks with great apps.
Yes.
There's nothing to innovate there. So the reason they failed is because they thought the same product that worked in the UK and Europe would work in the US, and it didn't. So one of the things we've done, we built a team, an entirely American team, American CEO, American head of product, American engineers. And we said, this is the product we have in the UK and Europe. That's the cohesive part, which is our unique payment technology we've built. That's our IP. What can we do that is on strategy with our paytech that fits that market? And the outcome is 70% the same product, but 30% is a whole different product. The way it works. For example, in the UK, Europe, we're a debit card. In the US, we're a credit card. That means you have a credit line and an ability to use curve just like a credit line. The anti-embarrassment in the UK is defaulting to a second or third card. The anti-embarrassment in the US is actually we are stepping in and giving a credit line to the customer so they will never experience a decline.
Fantastic.
So certain things are different in the US that are more likely to be successful for us.
Yeah, that makes a lot of sense. And I suppose that I was going to ask you about your Curve Flex, which is, if you like, your European buy now pay later product, which I must say I do think looks very, very neat. I mean, so you don't need Curve Flex in the US.
You do have Curve Flex in the US. You in the US just that you have 2 options to access credit with Curve. One option is just a regular credit line revolving credit card, like you're familiar with today. Another one is the Flex product, which basically means that any account, any card, any merchant, online or offline, you can swipe to Flex yet later. So you can go to Antarctica and the merchant is there and you can still swipe to pay later, which is remarkable because then you don't have to rely on the checkout having BNPL. You don't have to interact with multiple providers, and the debt is spread across multiple providers. So you don't really know how much you owe. Also, especially because they're not submitting to the credit scoring agency. So it's really hard for customers to keep track of their borrowing costs. Whereas Curve allows you to do everything in one place from all your different cards. And you have one view of all your borrowing costs and liabilities. So it's a very successful product.
It's very clever. I must say, it's very clever. If anybody who's watching this, hasn't actually encountered the Curve product, I do recommend you go online, check it out, and apply for a card. They're very good. I got one of those fancy metal ones. They're very good. So look, let's talk a little bit about. We're kind of running rather low on time, I'm afraid, because we've had lots to talk about. I'm going to move on to talking about, if you like, the economic backdrop. So it's not quite as sunny economically as it is physically at the moment. We've got increasing interest rates, we've got inflation, we've got reduced disposable incomes, and a degree of nervousness out there. How do you think this is going to affect the appetite for investors in our sector? And do you have some recommendations for fintechs to help them to ride the storm?
So, of course, the geopolitical conditions and the volatile markets are making their impact across the entire sector. And we're seeing this playing out in the news every week, and we're seeing that impact. There are, I think in some aspects, there are those fear mongering activities. For example, they're posting you the debt of the US versus GDP. But if you look at the chart correctly at how much debt versus GDP historically the US had and how it's being paid out with the bond rate over time, it's not so concerning. Actually, it's not so different than what we had in the past. But the fear in economic psychology is key, and the fear mongering is making its impact.
Yeah.
And I think if you look at the market from our side, VC-led companies that need VC money to be able to grow above their means, I think it's challenging time across the markets. It doesn't matter which market you are. The fintech is, of course, the best one to be in because it's remarkable ecosystem, a lot of town and a lot of innovation can be created there in those markets. So they're the ones who are seeing the least impact versus many other sectors we see. But it is a challenging time because many of the VCs since April, May until kind of July stayed focused on their own portfolio companies to see how they can help them.
Yes.
July, August, kind of dead months. So they kept kind of tipping in the water to see what's out there, but no decisions. My view is that they're all waiting to see what happens in the market, how the markets evolve, public markets, what happens with the Fed and the interest rate there, which companies succeed, which companies die. And October, probably Q4 is when we start to see their actions again. Also, we see, again, on the other side of fear mongering, people saying, no, they have like a lot of dry powder, $800 billion dry powder, wow. And they have limited time to deploy that, which they are right, but the time they have to deploy is not a year or two. It's now has been extended to most VCs to 3 years, which means the dry powder is not 800 a year, it's 150, 200 billion a year, more specifically. Still a lot historically dry powder, but it's not the 800 billion that they keep pointing in the news. So kind of going back to Curve, we're lucky to have great support from investors and a healthy ongoing dialogue with them and how we're progressing. So no real impact for us, but my advice for fintechs is, depending on their round, stage round A doesn't have much of an impact aside from valuation, got back to normal. Growth fund, late stage, they would have probably to wait until Q4 comes into play, do the very best of reducing their burn, get the burn multiple right, and essentially burn multiple is the way to look at it is like ROI on investment. So get the basics right that we talked about before, and believe in yourself and have the right perseverance to go and get the money right. But great companies still have appetite fundraising and great teams as well.
Yes, and I think part of the success story is having the passion that you clearly have, being very mission led, and having a great bunch of people in a strong culture, and a product and service that's really different. I mean, they sound kind of fairly basic things, but not everybody does those. So those, I think, are the companies who will be surviving. We will go through this difficult period. There will be a lot of individual hardship, I'm sure, and I think our role partly as an industry is to think about how we can support each other and those people who use our services as best we can. And in terms of thinking about other people, I know lots of people will have read your case studies, will have met you and been inspired by you. And a lot of people will be thinking about whether to follow in your footsteps. I know you have a 3-year-old and a 5-year-old, and maybe one day they'll be thinking about themselves, a career in business. What advice would you give, say, a new graduate who came up and said, "Shachar, I'm thinking about following in your footsteps. What do you recommend?"
So I think kind of the recommendation I give to every entrepreneur or wannabe entrepreneur is I'm asking the question why, and if the why is not intrinsic. I want to make an impact. I want to change how people interact with their money. I want to empower the world, and that comes from intrinsic because I've been on the other side. I've been in a poor family. I've seen what happens when there lack of education, selling of finance, lack of access to finance, and how difficult it was to raise a family. And that's what I want to bring to people. So that's the why, which is really important. And after hearing the why, the statement that we'll give them is that, are you willing to give the sacrifice required from that? Because most founders or young founders, young entrepreneurs will not understand the sacrifice it is to build a business. And Tony, whether it's a startup or a small business or the payment network you build, association you build, you probably know what I'm talking about. It's a lot of
Exactly.
sacrifice. It's a lot of hard work.
Completely. It's giving up.
Sacrifice.
It's giving up stuff. It's choosing.
Yeah.
It's making difficult choices. It's foregoing, and it's investing what's called sweat equity. It's many days and hours and weeks and months for little money or little reward.
You never turn off your mind from the business on holiday or not. You have to let go of some meeting with friends and family because of important business travel or important business meeting, or the business needs you to be working late at night. And the sacrifice is real and it's hard. And people really want it to be able to bridge the brick wall, jump above the brick wall. And many others have chosen not to, and that requires a lot of sacrifice. So the main one is the why, what motivates you to become that. If it's just money, there's faster ways to make money than being an entrepreneur, and less risky. If it's about really changing the world, that's a good why. It's intrinsic motivation. And then just realize that it's a lot of sacrifice. Because the moment you go in and get money from other people, you commit it to them. You commit to your shareholders or your partners to doing the returns. You cannot just wake up one day, sorry guys, I had enough, I'm out.
You can't do that. There's no exit. Yeah. There's no door marked exit, is there?
Because then you ruined your name. You ruined the name you've worked so hard to build.
Yes. Yeah. Having said that, you do strike me as somebody who does love it and loves the kind of the buzz and the intellectual challenge of it through and through. That comes across.
I do, but it's kind of the who you are. I'm naturally curious. I like to learn. I like to make an impact. I'm willing to give what it takes to make an impact, and I put enough people around me so when I'm down, they can give me up. When they're down, I can pick them up. Real builders, not executives, people like me who sign up to the same mission and wants to make a change in the world, and I'm willing to give what it takes to get there. So when you have a team like that reinforces you, it becomes a self-reinforcing team, a virtuous cycle of motivation.
Brilliant. I've just realised I've got this new idea. There's a new product enhancement at the Payments Association, which is a military college for young potential entrepreneurs in payments. Because I think
that's not bad. It's like Y Combinator. You get all the basics.
I think it would work very well. So thank you so much indeed. On behalf of the community, I appreciate you sharing your insights and genuine and authentic thoughts and also your view on the industry and where we're going. So Shachar Bialick, CEO from Curve, thank you so much.
Thank you very much for the opportunity.